This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, May 12th, 2015. Euro dollar. So the euro really remains locked within a consolidation now after breaking above a key neckline the other week of a double bottom formation. This keeps the pressure on the top side and suggests that the market still could be poised for additional strength towards the measured move objective, which coincides with the February peak around 115.35. At this point, only a break back below the neckline around 110.50 would compromise the current bullish constructive outlook and put the pressure back on the downside. Sterling dollar. So cable is broken to fresh 2015 highs after the market outperformed in Monday trade and surged through key psychological barriers at 156. At this point, the break above recent highs that we saw in the 154.97, 154.98, going back to the 29th of April, now opens a measured move upside objective towards the 59 area over the coming sessions. However, the broader downtrend still remains intact, and the market could be looking for a lower top once it trades up towards the 159 area. At this point, a break back below the low from Monday, which comes in at 153.93, would be required to take the immediate pressure off the top side. Dollar yen. So no significant updates for dollar yen, which remains confined to its consolidation, though it is clear that this consolidation over the past several months is a bullish consolidation with the market locked within a very well-defined uptrend. Really, only a break back below 115.55 would compromise the outlook, while any setback should continue to be very well supported ahead of 118 in favor of an eventual push beyond the recent highs from 7-year highs at 122.03 going back to early March. Euro Swiss. So Euro Swiss looks like it's in the process of recovering after putting in a low the other week at 102.35, and look for a break above recent highs at 105.25 to confirm a higher low and open the next major upside extension back towards the recovery peak from February at 108.15. Really only back below 102.35 would compromise this recovery outlook. Aussie dollar. So while Aussie has been recently well supported and the market has traded back up above 80, the market, however, overall remains locked within a well-defined downtrend, with any rally seen continuing to be very well capped above 80 in favor of an eventual lower top and bearish resumption back below the recent multi-year low at 75.60. Dollar CAD. So dollar CAD has seen some setbacks extend into the 11900s in recent trade, though this area should be very well supported in favor of a bullish resumption, eventually back above 128.35 and towards 130.65 further up. Really only a close below 119 would compromise this outlook. Kiwi dollar. So the New Zealand dollar looks to be carving a lower top in the 77.44 area ahead of the next major downside extension below 71.76 and towards 65 further down. At this point, really only a break back above 77.44 would compromise the bearish outlook. SPX 500. So the S&P 500, despite trading up and towards record highs and trading just off those record highs at 21.26 from the other week, has been unable to really sustain or hold on to gains up towards that level. At this point, given the contraction and volatility over the past several sessions, it is possible that we see the market start to trade lower and put in a considerable top. However, a break below 2040 would be required to confirm and accelerate declines. Inability to do so will keep the pressure on the top side. Gold. So gold remains locked within a multi-day consolidation, with the market largely holding between above 1170 but being well capped below 1225. At this point, a break on either side will be required for additional clarity, with a break back above 1225 to confirm or strengthen the outlook for a major base, while inability to do so and a break back below 1170 will put the pressure back on the downside towards that 2014 low at 1131.